Hi, I'm Robin Thompson with Thomson Reuters, and I'm here today with Winford Paschall, who is Director of CPE for Thomson Reuters. And today Winford is going to talk about the fiscal cliff. All right, what is the fiscal cliff and what is it that caused it?
Well, first of all, thank you, Robin, for inviting me today. And the fiscal cliff is the Congress's failure to act to address the budget issue, the federal deficit. And so what we're looking for is we're looking for Congress to reach some kind of a agreement that will avoid going over the fiscal cliff. Now, the fiscal cliff itself is actually the spiraling debt that the government has incurred, as well as the balanced budget amendment that has been tried to be passed. So those are the things that needs to be addressed in the fiscal cliff.
Okay, we know that there are three components to the fiscal cliff. Can you give us a list of those?
Sure. The three components are revenue increases, spending cuts, and the federal debt limit. The revenue increases relate to, you'll hear them referred to as the Bush tax cuts. Those include the 2001, 2003, and 2010 tax legislation that was passed during the George Bush administration. Also included in that is something that is probably more, will have more of an impact on the taxpayer than on the Bush tax cuts, and that's the AMT tax, the alternative minimum tax. The IRS estimates that if the Congress doesn't act to address this issue, that there will be 28 million new taxpayers that will be subject to the AMT tax. So this is very significant and something that needs to be addressed. Secondly, the spending cuts that are included are part of what's called the Budget Control Act. And these are a number of different types of expenditures, automatic cuts, and so forth. The cuts are designed to be so egregious that it will force Congress to make some type of resolution and to solve the problems of the excessive debt that's been incurred, as well as balancing the budget. As an example, 1/2 of these cuts will come directly out of the federal defense budget. So a significant portion of those cuts will be to our military. Thirdly, the debt limit, which is currently at $16 trillion, is a legal limit beyond which the Congress cannot continue to borrow money. The Federal Treasury cannot continue to borrow money. And the only way that they can exceed or go higher is for Congress to raise that limit. And so if Congress doesn't act on the revenues increases, the spending cuts, and the debt limit, then we're going to go over a fiscal cliff that we frankly don't know exactly what all will be the consequences, but we do know that they will be fairly dire.
Okay, does Congress have any options on how to deal with the fiscal cliff at this time?
Sure, they basically have three options. One is they can let all of the current increases, revenue increases, and expenditure cuts go into effect. They can opt to cancel all of those spending cuts and revenue increases. Or third, they can do some combination of allowing some of the cuts and revenue increases to go into effect and canceling others.
Okay, what I would like to know, and I'm sure a lot of you out there would like to know, is what will happen if we go over the fiscal cliff?
That's a good question. There's a lot of speculation as to what might be the result. Probably the most significant one comes from a number of economists that says if we go over the fiscal cliff, we're probably going to see the economy fall back into some type of double dip recession. And so anything that will happen from that will probably not be good for the economy.
Okay. What can the tax practitioners expect as a result of the government's attempt to fix the fiscal cliff?
Well, I think probably the first thing that we can expect is an awful lot of tax legislation, assuming that Congress does their job, that there will be a number of tax laws passed, possibly between now and the end of the year. And in fact, the IRS has said that if Congress does not get those laws passed in 2012 and it makes them retroactive to the first of the year of 2012, that it may not be able to file, or you may not be able to file your tax returns until March or even April, which will delay further any refunds that you might have.
Okay, we know that the deadline is approaching fast. Do you think that a compromise can be reached by that time?
That's a good question. Congress has had 3 years in which to address this problem, and all they've done is kick the can down the road and hope that someone else would do the work for them. So why should we think that we're going to get change now? But we can always hope.
Okay. Well, thank you, Winford, for that great information on the fiscal cliff, and thank you for joining us today. This concludes our session.